Hello and welcome to another episode of Substance on Substance. I'm Phil Graham, Head of the Economic Substance Analysis in the BVI at Harneys, joined again by Josh Mangeot.
Hi, everyone.
Wanted to firstly touch on everyone's favourite topic, the code. We still don't have it. Obviously, as we talked about on the last podcast, there was a hurricane in the BVI last week, which delayed the House of Assembly in terms of them being able to meet. We do understand there has been some progress. We do understand that the reading occurred. And we're very hopeful that there will be information coming out soon via the Gazette in the BVI, which will detail the passing of the legislation in relation to the BOSS Act. And then after that, the code being sent out by the ITA. We will, of course, update all of our listeners as soon as we hear anything. What I want to do today is dive in very quickly to some practical examples around two of the areas that we seem to be getting sort of the most amount of queries. The first one is obviously holding business. It is of huge amounts of interest to everyone around the world as to whether their entity may be deemed to be a holding business, given the very narrow definition of it under the economic substance legislation, or actually whether it might be outside scope for the legislation completely. Now, I wanted to sort of address some of these questions at Josh, who has been dealing with a large amount of these queries from our clients. The first query really is in and around bank accounts, and there's been a lot of conjecture around this point. My second question will be around brokerage accounts, so we'll leave that one for the moment. But actually, when looking at bank accounts that a company holds, Josh, what's your view on how that applies to the holding business definition and what an entity should be looking at vis-a-vis its bank account and its relationship?
Thanks, Phil. So on the face of it, the definition of a pure equity holding entity is very narrow. It's an entity that only holds equity participations in other entities and only receives dividends and capital gains. And the ITA has stressed how narrow that is. But the concern is that by receiving a dividend, a company may fall outside that definition if that dividend is cash or is received into a bank account, which would be an absurd result. So viewing this purposively, we think the answer is if the bank account is current account, only operated to receive the dividends and the capital gains and to pay the expenses of an entity, that is not enough to take you outside the definition. Viewing it purposively, that has to be disregarded. You get the same answer whether or not that current account bears interest. If there is a current account which is holding large amounts of cash, a significant amount, which particularly if that derives from some activity which is not holding the equity participations, historic activity that has ceased, for example, or there's a significant working capital reinvestment strategy, then that type of account may start to take you outside the definition. It's not a completely clean answer, but the takeaway point is bank accounts don't necessarily take you out.
Thank you. Moving on to brokerage accounts, which absolutely should be distinguished here, and again is a very common holding that a number of people use BVI companies for. They hold a brokerage account. In relation to that analysis, Josh, there are obviously two different slants. There is a brokerage account that has a multi sort of purpose, may have many different types of assets in it, and there is a brokerage account that purely has equities in it. If you could address both of those, that would be very helpful for our listeners.
Sure. So taking either of those first, the mixed purpose brokerage account typically will take the entity outside the narrow definition of being a pure equity holding entity, and assuming that is just then also comprising some other interests or debt held for investment, there is then no relevant activity at all. The type of brokerage account we often see in practice is a mixture of cash, cash equivalents, equities, and some other debt securities. And that kind of mixed portfolio brokerage account is not going to put you within the narrow definition. Where you're just holding equities, we think that you need to look at the way in which those equities are actually held. Most brokerage accounts are used to acquire listed equity securities where actually the entity won't hold the equity participation itself. The broker may do that, or in fact, the broker may hold some sort of interest in a security which is actually then held through a depository or a custodian or a clearing system structure. Again, in those examples, most of those will not be caught by the pure equity holding entity definition. If it's a brokerage account just holding private shares, for example, then you might have a pure equity holding entity, but those are pretty rare to encounter in practice.
Thank you. Looking at other assets that potentially a BVI vehicle could hold, if you could quickly sort of rattle through the type of assets that we commonly see, and obviously confirm what I think is going to be an obvious conclusion, but I'll let you take us through it.
Sure, thanks. I mean, people use BVI companies for all sorts of things. They are the world's leading incorporation product. They can hold things like art, they can hold real estate, they can hold cryptocurrency interests, they can hold bonds, aircraft. All of these things of themselves are not relevant activities. So in many cases, if you just have a holding company, that is not caught by any of the 9 relevant activity definitions. Those types of entities are not affected. The exception to that is where they're holding assets as part of one of the 9 relevant activities, in which case you need to look at that and decide if you're in any of those definitions.
Perfect. Finally, just to address it, because it's a very, very common use, property, both in terms of where you may hold a property real estate interest directly, and also where you may hold it through another entity that's located in the BVI or indeed elsewhere.
Sure. So holding real estate or investment property is not of itself a relevant activity. So if the BVI company holds a legal or an equitable interest in the property itself, that is not of itself a relevant activity. You do sometimes encounter companies which hold a mixture of equity participations and interest in real property. Again, because of the narrow definition, those ones will not be conducting any relevant activity because they're not a pure equity holding entity. The distinction is if the BVI company holds the equity participations in another entity, which then holds the property, i.e. an indirect holding structure, then the top BVI company in that example could be a pure equity holding entity if it satisfies that definition. So you need to look at how the property is held.
Perfect. Final question is in and around the financing and leasing activity, which is probably the second most common one we get asked around. Let's not talk about sort of complex financing structures, but a very common usage is in relation to intergroup lending. And I really wanted to sort of touch on that with you, Josh, and talk around the consideration that people will see as part of the Act and as part of the draft code that's out there, and what exactly that means, and how that's being analysed at the moment.
Thanks. So it is quite common to encounter in group structures some intercompany receivables or some intercompany loans. As you said, the definition can be quite complex. So if you're not sure, please do contact us with any questions, because it's difficult to give a clean answer on a podcast like this. That said, a lot of intercompany debt will not be caught by the definition because it's not provided for any consideration. The loans could be non-interest bearing, but typically they're not granted for any sort of fee or other economic or valuable consideration, which would satisfy the definition. Equally, they may not be part of a business of providing financing and leasing. They may be one-off, or they may be incidental to some other sort of business. In those circumstances, the ITA guidance again demonstrates that those will not be considered to be carrying on a business of financing or leasing. Equally, debt held for investment, we're told, is not part of a financing and leasing business. If you have a company which is providing lots of loans habitually, and it's clearly a regular activity, and those loans are provided for interest, for example, then you might be inside the definition. So in those circumstances, please contact a lawyer.
Fantastic. Hopefully those practical examples have been very useful, and look forward to speaking to you again next week.
Thanks very much, everybody.